Good turnaround Tuesday, everybody. How's everyone doing today? Alexander? Everybody?
Morning, Dale.
Hey, Ryan, how are you?
Yeah, not too bad, mate. You?
Doing pretty good. I wanted to start off with EG. You can see it, right?
Yeah.
So we're threatening this. That's going to be a pretty important breakout over, 84.60. I mean, classic 61.8 retrace, now threatening. If we have something like this from here or a fib extension from here, I think we're headed up towards maybe 86.5, 87. Shows up a little better on the weekly. Let me just move this here. And a continuation move down in gold and silver, but yeah, here we are. So I think we're going back here. This was a big breakdown, 87-ish, or even up here. Of course, we have to clear this. And you have to, I think Euro's bottom now, Ryan. Now we're getting the close back inside the wedge for the third time. Remember I said knocked at the door twice, the third time it'll get through.
Yeah.
I think it will. I think it sticks here. So I was pretty surprised when I walked in this morning that we didn't take out this high. We missed it by 5 pips to make a new high. But I don't know if I'd be waiting for that now with this kind of action and Euro back above 10.5. So that's what I see here today. And yields are down a little bit. No, they're not. They're up. And we're almost at the fiscal year end for this. And, I want to be short, but we have all these confirmed highs. I'd like to see one more high in the end to attempt it. Still looks like it could be consolidation or maybe back under 123. You got something here, like a descending triangle, right?
Yeah.
You have this descending line and a flat bottom here under 23, and that should measure to 21 if it gets through there.
Possible. It's like I said yesterday, I want to see some multi-day highs put in, or some levels put in to substantiate a top. The end's really doing nothing today. I mean, right this minute we're in the midst of Ukraine-Russia headlines.
Yeah,
that's giving euro dollar risk a bounce. So we are seeing some levels breaking, like you mentioned in euro dollar, but caution still, because these are headline driven moves. These are not fundamental driven moves.
Okay, so that's what lit up the euro.
Yeah.
Okay.
We had comments that earlier today that they were discussing a ceasefire.
Right.
Now we've had comments that there may be some sort of ceasefire around or reduction in operations, military operations around Kiev and Chernihiv. While they're talking up, getting a deal done or negotiations, it's all pointing towards, as they like to say, constructive talks. That we may get some sort of ceasefire coming into play, and that's obviously giving risk a boost.
What your intuition? To me, it sounds like you're skeptical, and you know what? So am I. Why wouldn't Putin right now, when he's trying to reconstitute his troops, make it look that way?
It depends. On one side you get Russia saying that they're advancing and they're destroying Ukraine military, air force, and that sort of stuff. And on the other side you get Ukraine saying they're giving Putin a bloody nose. So who knows? It may be that he saves face by saying our objective was to take Donbass and the other region. That's all we want. We're not going to go as far as Kiev. And if Ukraine surrenders and gives in to our demands, then we'll stop. And, on the other side, Ukraine could say, Putin's backing down because we put up such a strong fight, but we are conceding certain aspects and to bring an end to it. So we're closer to a resolution than we were yesterday. whether that all bears fruit is yet to be seen. We all hope it does, and the sooner the better. But when you look at how things are going, we've had headlines back and forth before, negotiations, were constructive, not stuff wasn't reached, and couldn't agree on this, couldn't agree on that. So we're edging. This is probably the closest we've come to a resolution than we have for a long time. So the market is paying attention to it.
Yeah. I was reading that even the Russian speakers in Donbass, after what Russia did, really do not want to become part of Greater Russia after this. So anyway, we'll see if they concede territory. And what about the reparations for rebuilding cities?
Well, that's the other side, isn't it? What happens in the long term? If there's a ceasefire tomorrow, Boris Johnson has already come out and said, a ceasefire doesn't mean the end of sanctions. They're going to count the cost of this going forward. Like you say, who pays for it? Who rebuilds Ukraine? And what do the West do about Russia and what they have done? They're not going to say, okay, right, fine, thank you very much. You've gone back. We'll call it over. They're going to need to. Are they going to push further? And is that going to create a larger scale conflict between the West and Russia because of what he's done in Ukraine? Who knows? But let's take one step at a time, and the market's going to react to what's going on now.
Yeah. Well, I mean, Cruz had a delayed reaction because when I came in, we were recovering back to here, and then look at these two candles.
Yeah.
So they're believing it. And I saw that we put out a tweet about the ruble, ForexAnalytix. So, I was talking about, looked like, the ruble had, had peaked. We're almost back to pre-invasion levels.
Yeah.
So I know that I get comments that it's not real or it's not happening, but we're commenting on it now. So maybe it is.
Yeah, well, we hope it is real, obviously, for the humanitarian aspect. But market's going to do what market's going to do, and we can only go with it. And if the markets think that this is near the end, then you're getting a taste of what's going to happen and which way things and assets are going to go. Stocks love it at the moment.
They do. They got it. They close above this 61.8. I tried it yesterday. It was good for 20 handles, and then. I said, get out of the way if we close over 56. And so where are we going now? New highs?
I'm gutted because I bought the break of that 50 level yesterday because the price action, and I've been saying it for a few days, looked a bit strong. We kept coming back to that 45, 50 area.
Yeah.
So I dropped a little buy stop in and it ran up 8 pips and then dumped all the way back down. And then today it's gone all the way up through and sailing happily away, as I say. So,
I will say this, that there's like some major resistance in NASDAQ here, and that has led the way. Okay. Yeah. And this was a real big pivot in NASDAQ, this 15.5 level. So we're not that far away.
No, those are the levels. Sorry, mate, go on.
Go ahead. No,
I was going to say those are the sort of levels that put the news headlines to the test, if you like. You get through some levels, but when you hit a big level, that's when is the market really getting on board these headlines, or are those the big resistance levels that are going to stop it? And that's where the market takes a step back and thinks, well, okay, well, we want a bit more than what we're getting from the headlines. And that's what we look at. Look at the big levels and see what happens.
Aussie doesn't seem to have the same, kind of juice that the European currencies have. Still doesn't look bad, but it just doesn't have the same momentum.
No, I was a bit worried about the Aussie because I think a lot of the drag has been Aussie yen. So Aussie dollar's been following. And of course, it comes back to the geographical aspect. The euro is going to gain more because it's on the doorstep, and this involves Europe, whereas Aussie's a million miles away. But it's holding fairly well. I do want to see this topside area broken in Aussie dollar. If we can't break through this, 25, 30, and then I think it's like 60 area, it's going to potentially look like a strong double top in play. And if it doesn't break it soon, I think we're going to see it down towards 74 again.
We're approaching what I see as pretty big levels for silver. I know I think a lot of people try it here between here and 20, 24, this moving average right here. But if we get through it, actually, we get through 24, that's not going to be a good sign for silver, in my view. I think it opens the door for much lower levels. So we'll see. Gold, last week I was talking 1970, we got to 66, and now we're approaching major support here as well. So precious metals, so basically the whole war trade's unwinding. That's what it is, right?
Yeah, until we get back to the other stuff.
Yeah, until he drops a chemical weapon or something. But anyway, Stel, you around?
Hello, good morning.
Good morning, buddy.
Very interesting to hear what you guys are talking.
There's your silver. You were thinking back down here, Stel.
2401 I have.
Okay.
Still, but the question remains. First of all, yes, seems to be breakthrough in talks. Do we trust that? One of our friends here wrote, you don't trust anything until the forces are actually out of the country.
Withdrawing,
right?
yeah.
But and the other question is, okay, let's say there's a ceasefire. Let's say Russia moves out today. Does that mean that inflation is gone? We go back to $50 oil, and everything's back to normal? Of course not. This is not something that's going to go away, or the effects of what's happened is going to go away within a day or a week or a month. So I think the markets are always very happy to price in the good stuff, and obviously every scenario is positive for stocks, right? If stocks are happy with anything. So for silver, I'm waiting. I have 2401. I've said that for a while. I'm waiting for that. If we do break that, I think we're going to 22. Those lows down there look pretty. I think they're going to be looking very, very probable. But at the end of the day, it depends on your time frame. It depends on your style of trading. The way I work. I've said this so many times on F.A.C.E. Last time I had the proper long in silver was 2018. It took a year and a half of nothing. Then during COVID, the position was down something like 15-20%. And then
that's nothing.
And then I got I trade with very little leverage. I trade very little leverage, and then after COVID, all these losses came back, and then at plus something like 60% I got out. So you have to be patient. If you like to trade the way I do, you try to find the best levels to start accumulating and then to start distributing. You have to look at both ways. So
what I did is I just waited for Stelios, and then I did a double reverse mortgage and went all in, and then I made a killing.
There you go.
It's a Rip Van Winkle strategy. You just put in your orders and take a nap until it happens, like Rip Van Winkle.
Right? And as for stocks, I've been talking about 4,600 in the S&P for a while. We are there, but I am not gonna go against this right as negotiations seem to be moving forward, because that when or if we do get a definite agreement, stocks are going to go a little bit further. It's kind of makes sense. I think this is probably sell the buy the rumor, sell the news, basically. So whenever this thing gets actually finished and settled, that yes, okay, this crisis is over, I think that's going to be the time to get short, because remember, yields are higher now. We have 250 in 10-year US. Next level is something like 262, and then we're going to be heading towards 3%, and stocks have to take notice at some point. So I'm not stepping in front of this yet, but I think when we do get this final confirmation, I think that's going to be the trigger. But it's crazy, right? Stocks, basically, there's no scenario where stocks go down. Even with the Russian invasion, stocks went down, but it was it was a little bit. It was if you zoom out on a weekly chart, it was actually almost nothing, which is incredible.
And it rallies into a peace agreement, and then that's it. So,
of course.
What are you thinking, Blake?
Well, I'm thinking, I'm glad I was long some of the Euro crosses. I've been buying the Euro since last week. I've been buying the Euro Aussie and Euro New Zealand, and as they Oh, here I'll show you. And I actually added to them this morning after the headlines came out. But the thing is, Dale, is here. Let me just kind of show you guys what I'm thinking here. I picked up some Euro Canadian because if you guys have seen crude just get absolutely smashed based on this headline. I mean, we're nearing 100. Not saying we're going to break it just yet, but we break 100 and then it's going to get it's going to look pretty good. But I wanted to share with you some of these Euro crosses that have been absolutely hammered. I mean, the Euro Aussie had a false breakdown on Friday. So nice. I bought some there. And then I bought some Euro New Zealand as we didn't make a new low. And now I'm looking forward to break back above this level here, and then you have a nice little squeeze going. But I think, as you said a little bit earlier, I think the Euro is bottoming here. And the one thing I wanted to point out regarding the Euro that I've talked to a lot of people about over the last couple of weeks is that the Euro stopped going down despite all this news, right? I mean, I'll give you guys the example that I gave, maybe even a week or two ago on this, on these free webinars. I was like, hey, if I didn't know anything and I didn't know any better, and I just heard Russia's going to invade Ukraine, and you said, hey, Blake, where do you think Euro is going to be? I would have said, well, probably near like parity, right? That would have been my gut, like just blurt, just gut instinct, blurt it out. That's where we're going. And the thing is the Euro got hit, but really after the initial pain that the Euro suffered, and I'm just talking about the Euro dollar, not the Euro crosses, because the Euro crosses is what got killed, but the Euro dollar really didn't. Now, if we come out of this and there are, peace talks, and whoever the viewer was that said, which I 100% agree with, you got to watch what the military does. Watch what they do, not necessarily what they say, type of situation. But if Russia does start to move some of its forces out or backs away from their current positions, that really is going to fuel the fire that we're going to get a more significant ceasefire situation. And then you got to watch for the Euro to really squeeze. And it's not just now you got the Euro dollar. Yeah, we could trade back up towards 113, 114. I'd agree with that. And I would gladly say that. But here you got like the Euro Aussie. I mean, don't forget, we went from 162 to 162 to 145. That's, what is that? 1,700 pips. Yeah. I mean, to recover half of that, back towards, the breakdown points, 152, 154. I remember people that were buying this at 157 just a few weeks ago, and I was like, that even just to get back there, I mean, you're talking 900 pips from where we're currently sitting. So you could see a big recovery in some of these currencies, some of these cross rates. And like I said, with crude coming down, you got to start looking at other rates. Like, you got the Euro Canadian I picked up this morning, right? 161% extension. I bought it this morning, little false breakdown here. Look at the Euro Norway. This is a big, and we actually got our bounce last time I looked at this particular chart, but 127% extension. This is a butterfly pattern right here, and at the bottom of a channel too. And I wasn't even looking at that until just now with you guys and gals here. So Dale, and one of the other things I need to mention, just that will fuel the fire to these currencies moving higher. Do you know how I feel about equities?
Yes. Yeah. You
do?
Well, I think, yesterday you were telling people to be careful about being long here in the market.
Yeah. So, well, here's the thing. Once this news comes out, let's just say official ceasefire, blah, blah, blah. Market's going to spike higher on the headlines. You have to sell the headlines. Yeah. That's a buy the rumor, sell the news.
You're just copying what I'm saying. Okay.
No, I just don't like what you said. So I'm going to re-say it in a different way. I'm just kidding.
I like that.
No, but as I've been telling the people in our chat room, by the way, if you guys just want to see, here, this is the ForexAnalytix chat room here. This is the chat room right here. So you guys can really see what we do around here. And you can see like the trades room, everything that we're discussing here, the Flowonomics, which is the macro chat room, then the general chat room. Everything I've been saying here for the last couple of weeks has been, look, if things get done on a Russia-Ukraine standpoint, if that happens, the market will be sold, because now we're faced with the reality that we have higher rates, we have high inflation, we have ridiculous commodity prices. Everybody's, bottom line has raised by 30 to 40%, whether you're talking about groceries, energy, housing, clothing. I don't care what you look at. We are now faced with these really, really high pressures, high commodity prices, inflation, like I said, and as a result to what happened with the Russia-Ukraine, probably set the whole market over the edge. So once the euphoria is out about the ceasefire, I think you have to sell that rally. So that would be my opinion regarding equities, and I've been saying that for like a long time in the chat rooms. Everybody already knows that, but I'm letting you guys know as we inch closer to something like that. There we go. So anyway, that's kind of my opinion about things currently, and I think we really got to watch crude oil. And Stelios wants to buy at silver at what'd you say, Stelios?
31. He's going to get filled here.
2401.
Yeah, 2401.
Yeah.
You might as well wait till it gets to 2101. I'm just
okay.
I'm just joking.
It's okay.
Hey, we're not too far away from the 200-day moving average, which you're looking at 2401 just above there. That makes a lot of sense. I think that 618 retracement will come into view, and it might give us a great buying opportunity for those of us that would like to be long some of these precious metals. So anyway,
let's see.
Those are my opinions, but also I don't. Do we have? Did Kman he show his face yet today?
I'm here.
Hey, Kman, how's it going?
Yeah, good.
So I gotta pick your brain here, and I know this is totally off topic, but we're seeing the dollar yen really reverse from I figure this is a big resistance zone. If you go on a weekly chart, most people have seen this already. Yeah. This is a big resistance zone going all the way back to 2002. You got some resistance up here, 2015. Highs up here in 2007, just big resistance level that we're facing. You're seeing the yen strengthen today ahead of the fiscal year end. So do you think that a lot of people front ran that move, this last 2 weeks, and here we go, as even good news, it's not giving us yen weakness. What are your thoughts here?
Yeah, it's a bit strange that when the headlines about a possible ceasefire came out, the dollar yen just kept on hanging there, and the yen crosses were flying on the back of higher equities, higher yields again in Euroland. It should have, if a big part of this move would have been linked to the Ukraine situation, yen should have strengthened. But it looks like not a lot is going to help yen for as long as the Bank of Japan is capping the yields. I did buy a downside yesterday because I think April is going to be massive for the yen. I did buy a 123 put into end of April on the dollar yen. Because I think sooner or later the Bank of Japan might give us at least a hint that they are going to widen the band. Overnight, we had again not Ministry of Finance, but the cabinet guys talking about the yen weakness. But as long as the market is not going to see actual facts from Bank of Japan and or Ministry of Finance, we might just be hanging around and play the yen crosses again. As for the front running of the end of fiscal year, I'm not sure that there has been a lot of front running, because the moves have been that fast that there, in my opinion, has not been that much front running by non-Japanese accounts. In my opinion, the Japanese importers who needed to buy more dollar-yen to pay for higher energy and commodities, they have done most. They will not have been waiting until the last day of the fiscal year to do their stuff. So that part is done. I think what we are left now with our positions from momentum funds, model funds, and yield differential players. But they can hang in there for a while, right? Because the yield differentials are still there.
Yeah. And
I'm a bit mixed, but I think April is going to be a massive month possibly a massive month for the yen.
a massive, I'm sorry, I didn't catch what you said.
It could be a massive month for the yen. So either Bank of Japan, Ministry of Finance remain completely silent, and the positiveness of a ceasefire, or at least less stress in Ukraine, may see the yen actually weaken further, because if the Bank of Japan continues to cap the rates, look at the yields elsewhere. The German 2 years, they've gone back above zero today, which makes the possibility of rate hikes before the end of the year going up to 67 or 70 BPs or so. So that's all. That might also weigh on the yen, just purely the yield differentials, the carry trades, right?
Yeah.
There was an article about carry trades on overnight as well. The emerging markets against yen, they've all been gaining 15-20% plus high yields. So,
I know right now we're really discussing, the
fiscal year end.
We're talking about, the fiscal year end for Japan, and what a big story that's been over the course of the last, I guess 2 or 3 weeks, really, that you've been harping on it a lot, Kman, to your credit. But I also want to say that here, if you guys have been listening here all year to the F.A.C.E webinar, let's just, forget if you guys were here in 2018 and 2020 and 2021 listening to Dale and myself, and even before let's just talk about just the last couple of months. We have talked a lot about interest rate differentials and about how it's really playing into, we're all starting to factor in the reality that the whole world is going to be raising rates, but Japan, right? This is an actual reality. And the fact of the matter is something that we've been talking about all of 2022 is the return of the carry trade. And you are going to see that in a big way moving forward. And now the good news is, once we get all this repricing because of fiscal year end, you're going to, in Japan, and you see all the, position squaring all happen, and the market's kind of, the dust settles. Let's just say the dust settles over the next month or two. What you're going to probably see, in my opinion, is we're going to return back to the early 2000s. Some of you may or may not remember that being in the early 2000s, where you have really all the yen pairs are going to be risk proxies, and you're going to see, the markets move higher. Yen's going to be sold, and the dollar is going to really get destroyed as a result, because you're going to see, let's just say Euro yen, Aussie yen, every other yen pair just ripping balls higher, right? You're going to have all of that happening. So the dollar's just going to get destroyed as a result, but it's going to be moving up against the yen. And then during periods of risk off, those yen pairs are going to be bought or sold, where you buy the yen and then you buy dollars. We're probably heading back to that, in my opinion, in the months and probably, let's just say year or two ahead. And I think that's where we're headed with all these yen pairs. Do you guys have any opinions about that? And some of you traders that have been around for a while, you FX traders, you might have remembered that. And the yen pairs, I have to say, they move massively. So when they all move, the dollar moves with it. So any opinions there?
Yeah, we could be back into a pure, in more pure form of risk on, risk off with the yen, as the Bank of Japan doesn't move.
Yeah, and then it doesn't move, correct. And so if you remember these times back here, in the these are the times that we're going to be probably witnessing again. And with that brings massive amounts of volatility. And so, guys, there's nowhere better to be than here with ForexAnalytix and in our chat rooms and having a look. That's isn't it a shameless plug right into our chat room. So get involved with ForexAnalytix. Also, hey, if you guys have not registered for this event, this is the Trader Summit event. By the way, I don't know if Steve is here.
I think he is.
Hey, Steve, how's it going?
Good, mate. How have you
So you just added a couple people to the lineup. Who did you add to the lineup? Oh, there he is.
Mark Minervini.
Yeah. Just added him to the lineup, which is awesome. I had somebody who's pretty high profile just actually reach out to me this morning, and he said, he goes, dude, that is a lineup that Real Vision would have a hard time putting together. And I'm like, it's taken a lot of work with the team behind the scenes. So it's free, guys and gals. Please attend. I'm going to go ahead and put this link up here in the chat box. Here, I'll put it up here. Make sure you guys register so you can get your recordings, even if you're not going to be there. It's going to be a huge event, and it's going to be so much fun.
I don't like exaggerating, but I think that this was not an exaggeration. I've checked Real Vision's events. I don't think they ever had a lineup like the one we have at the moment.
Yeah, I mean, look, it's going to be awesome. So make sure you are in attendance. So we'll see you guys there. That'll be great. And I'm sorry, I just realized what the time is, and I don't want to take away from Larry. Larry actually he's a contributor over at Trader Summit on the site, and he's really good, especially with equities and finding some of those nuggets in the market. So Dale's going to have a really good interview with Larry today. Is Larry here, Dale? Dale?
Yes,
Dale?
he's here.
Oh, okay. Just making sure you were here.
Me too.
So make sure you guys check out. Stick around for Larry. Larry is awesome. I actually really enjoy my time with him. On Trader Summit, and thanks to Dale, he's contributing over here at Trader Summit as well. So Dale, have a great interview. Kman, Ryan, Steve, Stelios, thank you guys for all your inputs today.
Thank you.
Yeah, and you guys register for this event. It's going to be an awesome event. All right. It's all yours, Dale.
It's like Woodstock for FX.
I might, or I may or may not be stoned. I'm joking.
Well, everyone knows there's no question about what
if you see me on video and I have a big thirst buster and a bag of Doritos, you'll know Blake's been doing it. Just kidding. Joking.
And Leandro is one of the headline acts too. Leandro,
I really feel bad.
He's the only act, Dale.
All right.
Play a musical instrument.
All right, guys.
All right. Thank you, team. Thank you very much for giving people some things to chew on, consider the rest of the session and going forward. And welcome back to F.A.C.E, Larry. I've missed you. How are you?
Good. How are you doing? Good morning.
Good morning. We're a little bit older since you and I last talked.
Yeah, but I think you're better looking. So
well,
good to you.
Only my wife thinks so.
Yeah,
but anyway, it's great because for a few years we only had one thing to talk about, right? It was pretty much a one-sided market,
right,
most of the time, and you rode the tiger. I know.
Oh, sure.
Every time I talked to you, you were long and you were long and you were long. Maybe you rotated,
right?
But you were long. So why don't you share your charts and tell me if things have changed for you and how you're approaching more of a two-sided market. I know you're long only, right? So
I am. Yeah,
okay.
Most of the time I'm long only.
Okay. Do you want to show your screen and so we can see some of the issues?
Yeah, let's go to share screen. Can you see my screen okay?
Got it now, Larry. Thank you.
And how's my sound? Okay, everything's good?
Yeah, you're clear.
Good. All right, so to get started, so I'm still long.
Okay.
But as you said, I've been pretty active on the sector rotation. So I started to sell out of those high beta tech stocks like Snowflake and F.A.C.E back in November and December. Tech started to roll over and I moved pretty strongly into commodities. And right now I'm mixed. So I've been buying tech again. I'll go through some charts. And I've got to tell you that, the fundamental news out there, if we just look at the news, there's a lot of reasons why people could be bearish. But if we look at the charts and what the market's reaction has been, the market's reaction has been pretty strong. And the key thing is the Fed is going to hike pretty aggressively. I think.
Larry.
Yep.
Oh, excuse me. I think last Monday was really a great market tell because that's when Powell came out as super hawk.
Yep.
And the market, S&Ps maybe sold off about 25, 30 handles. And by the end of the day, they were unchanged.
Yeah.
And that was really a major test. It looks like that day it came off your red moving average to the point and closed unchanged. See that?
Yeah,
day?
and that's the 50-day. And a couple things. I'll start with the indices, and I'll just go through some stock charts. But what I'm seeing with the S&P is a couple things. It is 6 of the last 8 up days. It's closed right at the highs of the day. So if you look yesterday, Friday, Thursday, here, and here. So it's closed at the highs of the day. And when the market was unwinding, it was fading intraday. The early morning rallies were being sold and it was closing near the lows of the day. So with the S&P back over 4,500, the way that I see it is as long as the S&P holds over 4,350 on any type of pullbacks, because I always expect after a big move like this, I always expect some type of a technical consolidation, or just a reset before going higher. But back over 4,500, S&P's up 8 of the last 10 days. And like you said, the bond market right now is pricing in 2 50 basis point rate hikes, one in May, one in June. The Fed's been, very aggressive and the market just continues to go higher. And what I think it is, I think the market was really concerned about inflation, and you saw some of these tech stocks get killed. And I think that the market, even though they know the Fed is behind the curve, just the fact that they're doing something, I think the market sees some clarity.
What do you think of this narrative? And I know you're a thinking man in the market. You're not just, it's over the moving average, and be that mechanical.
Right.
Since commodities have become so hot that commodities take a breather into early summer, while
I
the
think
stock market's making new highs.
I think it's possible. Commodities have had a big breakout, especially crude oil. But what I think the market is starting to possibly price in it going forward is maybe a little bit of an economic slowdown, because if the Fed hikes as aggressively as they say that they're going to, then generally that's designed to cool off the economy, which could put some pressure on crude oil. But when I take a look at the commodities ETF, or when I take a look at crude oil, on crude it had a sharp pullback, but over 90, I'd give the benefit of the doubt, for my time frame, to the long side. But I think it's possible that commodities could have some weakness.
Okay. All right. So tell me what you like.
So we're going to start with tech, and I'll start with a few recent positions. So NVIDIA, pre-market, when I took a look, NVIDIA was about 288 or so, but a couple things here. So it went into a strong downtrend. So stage 4, pretty strong downtrend, but then it started to build a base, held over 200 to 210, 1, 2, 3, 4 times. But then last week, or about 2 weeks ago, along with Tesla and some of these other high beta, Apple's been strong.
Yeah.
But closed over the 50-day, had a big breakout move here, quiet consolidation, another breakout move here. So it's been consolidating over the top of this base. And then this morning, it's testing another move higher. It's got a bullish 20, 50-day cross to the upside. So I see going from stage 4 to stage one, breakout that held, and I see all of this as very bullish price action. And NVIDIA is a key stock, obviously, for the market and for the tech sector. Apple's been a little bit stronger, barely broke below the 200-day.
Yeah, that's what. Yeah, that, and you know, that's what I was looking for. I saw a guy talking on CNBC.
Yeah,
and they were talking about, you know, I forgot who it was. He said, you know, I think to really clean out the market, we need Apple to close under the 200.
Yeah.
And that would panic people. And then the next day it reversed back over it. And we were off to the races. And Larry, I know, do you follow sentiment as well? At the bottom, no one likes stocks. It was the most bearish I've seen people in equities, and I can't remember how long. There were 10% bulls. And, no one liked them.
Yeah, that's how the bottoms get formed, is when everybody's, just doesn't want to talk about stocks. And I posted a chart last week. It was on Bloomberg, and I think they said that the AAII bulls to bears was the lowest level since the lows in 2008. So pretty much everyone is just, mentally washed out.
Yeah.
But Apple holding up well. So these are leaders. Tesla's obviously been, so I missed this breakout move in Tesla, but Tesla's similar to NVIDIA. So stage 4, stage 1 base over the 50-day, all constructive. Microsoft is starting to show some strength here. So Microsoft yesterday closed at a 50-day high. And what I want to do, Dale, and I think you know this because we've talked for a while, is I try to put opinions aside as much as possible and just focus on what's the market actually doing. Because the collective market is smarter than any of us, anybody on CNBC. And for whatever reason, the market's been moving higher. And when I see these leaders like Microsoft 50-day highs, this is bullish trend action, as opposed to when they were all just getting, constantly sold. So seeing a lot of strength in tech, semis. So SMH, semis got downgraded yesterday by Goldman Sachs, and the group still closed higher. Same thing, back over the 50-day, testing back over the 200-day. So for me, all of this is just bullish price action. Now I will say this. I always expect a pullback at any single time, especially there's a war that's going on. We don't know what's going to happen over there. Something else that's constructive. So the VIX this morning was trading at 1923. So, which isn't on this chart, but that would put the VIX down at the mid-January level. So the key number for me is 20. If VIX can start to move lower under 20, this indicates a lot of volatility that's coming out of the market right now. So these are just all, if I had a checklist for price signals, is it bullish or is it bearish? Everything that we've taken a look at so far, I think is bullish. AMD. So AMD looks like it's just getting started. So I've got a position here, but it was in a strong downtrend below that 50-day. So finally, you can see it's been under the 50-day almost all year. Closed over the 50-day last week on a big breakout move, quiet consolidation. This morning I looked, it was testing about 122. So I think if AMD gets over 125, I think it could open up that chart for higher. So I don't want to talk about just tech. I know we're almost.
I want to ask you about this then, if you don't mind. Just talk about tech.
Sure.
We've had way exceeded my expectations for this wave in rates in the 10-year to go to 2.5 or better.
Sure.
In such a hurry.
Yeah.
So I'm not impressed with what the financials did with this kind of move in rates.
Here's
is that
the thing.
an avoid for you?
I'll tell you what, I'm not doing anything with the banks, and I focus on the bank, and I'm not sure why. And I had Bank of America and Wells Fargo. I'm not sure why the banks haven't been able to break out, but where I am positioned in the financials. So I've got the insurance stocks.
Okay.
So I've got Berkshire Hathaway, and I got into it well before this breakout. But Berkshire keeps going higher. If you take a look at a stock like AIG, it's near a breakout. If you take a look at Chubb's based in Europe. But so for whatever reason, and I'm sure someone that, really understands bond yields can explain it, but for whatever reason, the banks themselves have not been participating whatsoever. JP Morgan is still a bad chart, below the 50-day. The brokers, these are still bad charts.
Yeah. Brokers are broken.
They're bad charts. They're below the 50-day in downtrends. But for whatever reason, these insurance stocks, if you take a look at Allstate, the insurance stocks are very strong. So I'd like to see the banks improve, but they're just not. You hit the nail right on the head. And there's a lot going on in the yield curve, because I think the 2 and the 30, I think it's inverted or it's close. Maybe it's the 5 and the 30. But if you look at the 3-month yield curve, that's as steep as it gets.
You like anything in cannabis?
I don't follow that group too much.
Okay.
I will tell you though, what I see from the more speculative stocks is the crypto stocks.
Okay.
And the clean energy stocks, for people that are looking for the high beta stuff, the crypto stocks, even Bitcoin has been acting well, but Coinbase recently came over the 50-day. If you look at these solar stocks like Enphase, where'd Enphase go? Enphase is trying to break out, but what the key thing that this tells me is when the crypto stocks and these clean energy stocks, which are more speculative, when they start to improve on their charts, that tells me that the market's just more comfortable with risk.
Yeah, right. Risk on.
And I'm watching the commodities. I still got positions in energy XLE. It's had a pretty strong run. I'd like to see it hold that 50-day. I've got the fertilizer stocks. Now, I just took some off the table on Friday on my members site in Nutrien, because these fertilizer stocks have had big moves.
30%.
But I just don't think, I want to be buying it up here. So we'll see, where these correct down to. I think the commodities move still has some legs to it, but they could be open to some type of a sharp pullback after the bigger move. So I've been reducing the commodities, but I'm still holding positions.
Okay. Anything else? Do you follow? I'd be interested. Can you pull up ARC? I mean, everyone's been, all on Kathy Wood for her. Okay, so here's my thesis.
Yep.
S&Ps make new all-time highs.
Right.
She's in so many broken stocks, and there are other broken stocks. I think that Facebook is a broken stock.
Sure.
And Netflix is a broken stock. But isn't it possible that if we make new all-time highs in the S&Ps, all ARC does is correct the decline?
When you say correct the decline, how do you mean? Keep going higher?
Maybe
no. Back?
Yeah, like rally back to your moving average at 84. So S&Ps could be at new all-time highs.
Yeah.
And she's in some stocks that have really, 70-80% declines, that all they do is recover. They don't make new highs.
Yeah, I think that you're right. So I think a lot of these stocks. So I posted ARC actually this morning, because ARC in the pre-market is
it looks like it's going to go.
Oh, it's testing over the 50-day for the first time since. So if ARC can close over 70, then what I think is what you said. I think a lot of these stocks are, they're broken for a long time, but these stocks that got hit pretty hard, they could have some pretty sharp recovery moves. But for me, I'm not doing anything. I haven't had ARC, I don't think, in forever. And, I'm going to stay with, NVIDIA and AMD and those stocks that are up here. But yeah, I'm seeing a lot of these broken down stocks. If you take a look at Square is actually a good chart. So Square 280 to 80, I don't know, that's maybe 70% down. But if you take a look at it, it went from stage 4 into a stage 1 base And now the price has been breaking out over the top of that base, so holding over 130. So here's the key thing, and for your listeners, if we get any really bad headline from overseas, any of these stocks can pull back at any time, 10 or 15%. So I'm not trying to call, that they can't pull back. But, from a trend perspective, when I look at how the overall trend is setting up, I think Square 20, 50-day cross to the upside, 50-day is flattening out. I think Square over 120 is it's an interesting chart.
Any interest in, there's been interest in the uranium stocks because of what's happening in this energy crisis that people may have to go back to, considering nuclear plants. So
yeah, I think it makes sense. I don't have anything there. I've had CCJ on our members high beta list for about 6 weeks or so. I don't do too much with uranium. What happens is I run stops on every position that I take. And some of these charts like uranium, it can be pretty volatile on my stops.
Yeah.
Yeah. So, so I tend to stick, I've got Devon Energy. I've had that for a long time. I've got Chevron, but I think the energy sector makes sense. But yeah, I think with those uranium stocks, I think you just have to realize that, they can move 20% either way pretty quick. But it's been trending higher.
Anything you see outside of the U.S. or are you strictly U.S. Centric?
Brazil's been really strong. And I think part of the reason Brazil's been so strong is because of all the sanctions that have been placed on Russia.
Yeah.
So Brazil's got a ton of natural resources, metals, mining, crude oil. I will say in that metals and mining group, DHP, very strong, starting to break out on that chart.
Rio Tinto too.
Yeah, Vale. So I've got a position in Vale. I've had this for a while. Just strong uptrend, near breaking out. Rio, Rio's improving too. So I like the BHP and the Vale charts better because they're higher. But at the end of the day, they're all going to pretty much, go up or go down together, I think.
Okay. What was kind of unusual and interesting is during this interest rate cycle, how well utilities have held up.
Yeah.
What do you think's behind that? Look at that. It's amazing.
It is. And I've got a low volatility list I put out every week for the members because we've got not everybody wants Tesla, and some people are just looking for slow and steady. And these utilities, it could be a couple things. I don't know if it's their earnings predictability. I don't know if it's that there's a lot of fund managers that don't want to get caught up in commodities and tech and all that. So there's maybe a little bit of a flight to safety there. Maybe the market thinks that 6 months, with the yield curve, the market could be pricing in a slowdown. Utilities generally do very well, when the economy slows down. But yeah, it's a really strong sector.
Yeah, you have to think that if they could perform it with a headwind, what's going to happen when rates subside a bit?
Yeah, I mean, if bond yields come down, utilities should, traditionally, I think they would perform better because of their strong yield. But utilities have been really strong. And
the flip side is a buddy of mine who's a trader says the housing stocks have been getting hammered.
I was just going there and I put all these housing stocks on my avoid list for members recently because, two things. So the charts look bad. I mean, you can see they've rolled over below the 50-day, but I just can't picture a market where, mortgage rates go much higher and then, home builders or home improvement does well. So, I could be wrong. But the 10-week rolled over across the 40-week, just in a downtrend, and that's one group that I'm completely avoiding right now.
Okay, so I would say the majority of what you really like is back to the old guard that led the bull market for many years.
I like healthcare a lot.
Okay.
So I've got Bristol Myers. If you take a look at a chart like ABC, that's holding up well. Eli Lilly and healthcare is defensive as well. So even if we go into an economic slowdown, if you get sick, you get sick. You know, and these healthcare companies, they've got pricing power. They just raise the rates for the insurance companies. But if you take a look at a stock like AbbVie, I mean, and every time I look at AbbVie, I always think the chart is extended.
Yeah,
you know, it's looked extended since here, and it keeps. Yeah. But you know, Bristol Myers, I've got a position in Bristol. It's got a nice dividend. It's low volatility. You know, even for my own positions, you know, a year and a half ago, I was comfortable just holding a bunch of stocks like Tesla, and I'm not as comfortable with the volatility. So I've got, you know, the Nvidias of the world and the miners and stuff. But I think having stocks like Bristol, you know, in healthcare offsets a lot of that volatility. And it doesn't matter, you know, what happens with the yield curve. Healthcare, you know, for the most part, is pretty defensive.
Okay, Larry. So people that are hearing us now and seeing your charts, or will listen to the recording later, best way to follow your work and become part of your community?
2 places. So my website is bluechipdaily.com. It's a members website. I've got a members Twitter page. I'm on there pretty much from 8:15 in the morning until about 6 o'clock at night. If you go to the top performers page, you can take a look at some of the past you know, ideas that I posted for members. We got into commodities long before this commodities breakout, but this just tells you a little bit about the technical analysis that I do as far as trend analysis. And then on my Twitter page, it's at LMT978, and I post pretty actively on there, but the real actionable, you know, here's what I'm buying, here's what I'm selling, happens on the members page.
Okay. So Larry's a top gun. And if you're interested in equities, he's a must follow at the minimum, and consider his newsletter so that you have some great ideas in equities. Thank you, my trading warrior brother.
Dale, as always, thank you for having me on, my friend. I always enjoy our talks.
Yeah, me too, Larry. You crystallize things in like 25 minutes.
I try to. Yeah.
Mission accomplished, as George Bush said.
Yes, sir.
Remember? All right.
I do.
All right, everyone. Larry Tentarelli, thank you so much. Remember, everyone, don't just count your pips, your shares, your coins, your oil rigs. Count your blessings, and you could join the team in 18 minutes on the Morning Edge, and we'll see you tomorrow. So
thank you. Have a great day, everyone.
All right. You too, Larry.